Hello, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Thank you once again for tuning in. Got a lot to talk about this week. Let's start with this Ontario couple who were happy to walk away from $140,000 they gave a developer or a builder awaiting the purchase of their new home. So here it is. This is from CTV Kitchener. The house was in Guelph. Ontario couple walks away from $140,000 after dispute with developer. So there was two issues with the developer. One was that they were offering $100,000 incentives to other people to purchase homes because they hadn't sold enough. And the other one was the ballooning fees. So let's start with the ballooning fees. I was at work that day when I got the email from the lawyer saying, hey, I need 6 post-dated checks for basically $6,600. Originally told the occupancy fee was $3,250 per month, Jennison was told 2 days before moving in that that number had ballooned to $5,423. Additionally, the maintenance fee went up from $309 to $517. All in with tax, Jennison says it came to around $6,600 monthly. So of course, when you buy a condo, there's an occupancy period until they form the corporation, the condo corporation, and sometimes you have to wait for more sales to happen. Sometimes it's just a closing procedure. But until that time comes, you have to rent from the builder. So they give you a rental contract, and it's called an occupancy period until you can finally close. Once the corporation has been formed, you close and you get your title. So this is what they're talking about. There was all these ballooning fees. They weren't what they said because the builder interest rates went up. So the builder has to pay the interest on that outstanding loan. And of course, they didn't expect the interest rates to go up, and they have to pass that on to the buyer. Jennison and Morel say, adding to the confusion, there was no way to tell how long the occupancy fee would be in place. It could be 2 years that we were paying and nothing's going towards the mortgage, Morel said. So we calculated at 6 months of checks is about $40,000 just going down the drain. And that was the thing. They hadn't even sold all the units. So the occupancy period was an unlimited amount of time at this point. So yeah, there was a big, that was a big issue. That was probably the icing on the cake. The other one was the drop in prices and the incentives to other buyers that are going to buy these homes for less than they paid. And at the end of the day, this is what they had to say. And that's sad that we were relieved to lose $140,000, Morel said. I was happy when I got the email. I'm like, okay, we're out. They are keeping our down payment. I'm ecstatic. So ecstatic and happy that he lost $140,000 just goes to show you the state of the real estate market over the last few years. The regrets are coming now. People are actually happy to lose $140,000 because they probably would have lost a lot more if they hadn't have negotiated this deal with the builder. And being the investigative kind of person I am, I looked up the builder because it was in the article. And of course, I found the unit. So here's just some background info. This is Fusion Homes. Sora at the Glade was the name of the development in Guelph. And of course, on the website, it says save over $100,000, contemporary townhomes, wood decks included. And from cross-referencing the unit on the video, I could tell that it was unit 22 here at the bottom, and it was a Sundance Elevation B unit, and I have the price list here. Their unit is at the bottom. You can see that the included premiums and upgrades or upgrades and premiums is a different amount than the rest. It's only $47,000. The original list price was $986,900. Of course, it dropped to $886,900, which was probably what they were very upset about. And it looks like it's dropped even further now to a total of $125,000 off the price to $861,900. So it looks like a smart move from that couple. So I've had a lot of questions or people asking for my opinion on the new mortgage charter that was released last week in the fall economic update from our finance minister or for the government. And so I did look through it a little bit. Wasn't a lot jumping out at me, but let's go through it. Here's an article from the Financial Post. And they kind of summarize it well, both sides of the argument here. I'm just going to stick to the one side because the other side is realtors and mortgage brokers saying it's not so bad or it's the right thing or whatnot. Liberals' mortgage charter draws praise and warnings as renewal cliff looms. Economist David Rosenberg warns of perverse incentives and unintended consequences. Under the Canadian Mortgage Charter, lenders will have to contact homeowners 4 to 6 months in advance of their mortgage renewal to inform them of the renewal options. So that's nothing new. Usually you'll get a letter 4 to 6 months in advance. Here's your new rate. Instead of a rate this time, you're going to get, here's your options, because you can't just sign on the dotted line because you're, negatively amortized or whatever the case may be. But anyway, it's kind of a standard practice that you're going to get a letter 4 to 6 months in advance of an upcoming mortgage renewal. So nothing new there, which must include the ability to make lump sum payments to avoid negative amortization and the option to sell their principal residence without a prepayment penalties. So of course, most lenders these days, you do have a prepayment opportunity or lump sum, opportunity where I think it's 10% down. A lot of them say you can put 10% down at your renewal date or at any point in any given year, once per year. Lenders will also be required to offer temporary extensions of amortization periods for mortgagors at risk and to waive any fees and costs for doing so. Well, they've been doing that the whole time, extending amortizations and negative amortizations and all the rest of that. So I don't really know what that's about, but this is nothing new. This has been happening for the last 12 to 18 months. In addition, banks won't be able to charge interest on interest if a borrower is temporarily in a period of negative amortization, which means they are covering just the interest without paying down any principal. Well, isn't that nice? No interest on interest, just interest in general. The Charter also provides relief for insured borrowers from a mortgage stress test if they switch banks to renew, a move intended to increase competition among lenders and ease the pain of renewals over the next couple of years amid higher interest rates. So no stress test, but that's only for insured mortgages. If you are not insured, you probably have to be subject to the stress test still. David Rosenberg, who predicted the U.S. housing meltdown in 2008 when he was at Merrill Lynch, warned unintended consequences could prolong the pain. So he's pretty much saying you're kicking the can down the road and it's going to make things worse, or it's not going to change a thing. You're still going to have the pain at the end of the day. Rosenberg acknowledged the issues facing consumers amid high inflation and interest rates, but criticized the mortgage charter as a means to deal with overextended borrowers, saying that while the relief measures would undoubtedly support borrowers, the charter runs the risk of creating perverse incentives and unintended consequences in a sector deeply in need of correction. Letting borrowers have extended amortizations and other fee and payment relief risks prolonging the correction in the housing market and favors existing mortgage holders remaining overextended at new buyers' expense, he wrote in a November 22nd note to clients of Rosenberg Research and Associates, Inc. So, of course, by kicking the can down the road further, you're making an unfair playing field for people waiting to get into the market. The market should be correcting, but of course, they're avoiding this for political reasons. The government, of course, they're the ones that came up with this charter. And you're messing with the natural cycle of financial markets and the housing market. Which brings us on to our next subject or chart, and this is the updated mortgage arrears. We just had a new update from the Central Bankers Association. This is the percent of mortgage arrears compared with the total mortgages in Canada. And you can see we're still at very low measures here. We did tick up in September, though. September is the latest month that we have the data for. And looking at that by the number of mortgage arrears as opposed to the percent that we just looked at, this is the total number. It's 8,140 mortgages are in arrears right now, or as of September 2023. This is the first time it's been above 8,000 since February 2022. And for those of you who do your research, you know that interest rates take time to take effect. It's usually 18 to 24 months. So it's just over 18 months since the first rate hike, and we're seeing those numbers come to levels that we haven't seen in 18 months. So it's the timeline is playing out as it should, even with the Bank of Canada, the Government of Canada kicking the can down the road and doing things they probably shouldn't be doing. Looking at the Toronto Real Estate Board Power of Sales, this is from last week. I updated it. I do this about every 3 weeks. You can see, again, they have significantly increased in that 3-week period over the last time I checked. In the boards surrounding the GTA, they have increased, not as significantly as the GTA, but they have increased, still keeping that upward trend. And just one more chart on that here. This is the breakdown from the big banks to the alternate and private lenders. You can see the alternate lenders and the private lenders still hold the majority of those MLS Power of Sales right now. Okay, and the last thing I want to talk about is happening in 3 days from now. The biggest change in organized real estate in like decades. This is the open offer process. There's a bunch of other changes going on, a lot of administrative kind of stuff. There's a lot to say about that, but I'm not going to get into that today. I want to get into the open offer details. There's still a lot of confusion from our regulatory bodies. I wouldn't even say confusion, actually. I would say mixed messaging. They kind of want to approach it in a certain way. But anyway, let me show you what I mean here. Here is the new form that realtors will be giving to the sellers when they list a house. Usually you sign a listing agreement and any other directions to say, oh, I want to wait, 2 days for offers or whatever the case may be. That's a different form. But this is the new form that is entitled Seller Direction to Share Substance of Offers. And of course, the seller directs the agent to say, yes, disclose the price, the deposit, the conditions, the closing date, or other. They can choose one or all of these things. And at the top there, you can see, not in effect until December 1st, 2023. Next, I want to point out where the kind of mixed messaging or where things are going. And even Aurea admitted this on a webinar, just that there's no clear direction. They wish they had more from the Real Estate Council of Ontario. But anyway, they're kind of playing it safe right now. And again, I'm going to explain more as I go through this. So you can see the purpose of this form, this specific form, is in the event of receiving one or more competing written offers, you are hereby directed to share the following substance of any and all such competing written offers with each and every person who is making one of the offers. So this says to the agent, if you get another offer, you can share this information to each and every one of those other offers, right? It doesn't say anything about sharing it with anybody else, but it says, I'm directing you can share it with any other competing offers. Now, what RICO has to say, and I've covered this before, but we're going to go over it real quick here again. Nothing in the legislation prevents a seller from directing the agent to communicate the number of offers or share the content of the offers with persons other than those making one of the offers, or prevents the agent from following the seller's lawful direction. So this says you can share it with whoever, not just the people who are competing. You can share it with anyone. Nothing prevents you from sharing it wherever you want. Anyway, let's keep reading. The legislation does not address an open offer process or put rules in place regarding how an open offer process would be conducted. It simply permits an agent to follow the seller's written direction to share all or parts of the content of the offers. So there's no rules. It's like the Wild West out there, that if you get an offer and the seller gives you direction, you can share all or parts of those offers, whatever's written in that direction from the seller. I don't know if you've caught on with the confusing part yet, but let's go back to the form we're provided with. Now, again, on this form, it's giving you written direction from the seller to share all or parts of the written offers, but it's saying on this form, in the event of receiving one or more, you can share it with the competing offers, not with anybody. But we're very clear, there's nothing to prevent the agent from sharing it with anybody, but we haven't been provided with a form that says that. We've been provided with a form that limits who we can share it to, only other competing offers. Anyway, so there's going to be a lot of discovery and interpretation of these new rules, and it's going to be interesting to see what happens. And there's going to be all sorts of games and tricks and things happening, so I would just be careful as a buyer. And there's things for buyers in there too. You can put in that you don't want your details to be disclosed. No personal details will be disclosed, but your price or whatever you're offering. So what will buyers choose to do at the end of the day? Will they choose to limit the seller from disclosing the details and make their offers null and void? Or will they allow it to be disclosed? And of course, the sellers have to choose, are they going to disclose or not disclose? Let me know what you think in the comments, if you're either a buyer or a seller, or potentially in the future, what you would prefer. And again, it is a strategy, and there's going to be all sorts of new strategies coming out in this process. So it'll be very interesting. I'm going to have many updates, obviously, and there's going to be many stories of things that are happening over the next week or two and months, obviously. Anyway, that's it for this week. Thanks for watching, and I'll see you next time.